Hey everyone, Daniel Mahabir here, your Las Vegas real estate extraordinaire, and today we're discussing how you can buy a house with bad or poor credit. I'll start by saying the good news. Buying a house with bad credit is possible, but it will likely cost you more money in the long run. So let's first define what poor or bad credit is. So credit scores generally range from 300 to 850. According to Experian, one of the three major credit bureaus, a credit score between 300 to 579 is considered very poor, while a score of 580 to 669 is considered fair. For the sake of this video, I'm talking to you if you fall into either of these ranges. Now let's talk about the possibilities for buying a house, starting with the Federal Housing Administration loan, otherwise known as the FHA loan. The FHA loan is a government-backed loan designed to help people become homeowners even if their credit scores are not very good. The fact that it is government-backed means it's less risky for lenders to offer this loan and can thus offer lower interest rates and with better terms. FHA loans allow borrowers with down payments as low as 3.5% to qualify for mortgage loan programs, as long as their credit scores are 580 or higher. For homebuyers with scores between 500 to 579, it is still possible to obtain a mortgage guaranteed by the FHA, but a minimum 10% down payment is required. Keep in mind, not a lot of lenders offer that program. If your scores are below 500, you're not going to be able to qualify for an FHA insured home loan. Now, eligible veterans, current service members, and surviving spouses of service members may be able to qualify for a home loan through the Department of Veterans Affairs, otherwise known as a VA loan. VA loans require no money down, and although there is no minimum credit score requirements laid out by the Department of Veterans Affairs, many lenders will be looking for a minimum 620 to be eligible. Outside of those offerings, some lenders will have other options available, though you'll likely need a minimum 620 to 640 credit score and a sizable down payment to qualify. So what should you do if you have poor or bad credit? My first bit of advice, although not many of you are going to like it, would be to do a little bit of homework and see if you can improve your credit score first. Doing so could actually end up saving you thousands of dollars through a lower interest rate and decrease your required down payment. This is as simple as getting a copy of your credit report from all three major credit bureaus. So that includes Experian, Equifax, and TransUnion. You can get those scores reports at annualcreditreport.com. Once you get them, look for any mistakes or errors. If you notice something incorrect, you can file a dispute online through the credit bureau's website. If you have any collections on your credit report, you might actually want to consider paying those off to improve your credit score. But first, before you pay anything, write up a goodwill deletion request letter prior to paying to see if the creditor would be willing to delete the blemish from your credit report. Make sure they put in writing that they are willing to do so if in fact you come to an agreement. Now, fixing your credit can be an intimidating process for some, so speaking with a credit counselor or credit repair company would be a good option for those that have the money to do so. Credit repair can be quite expensive. For those still with bad credit, homeownership might still be possible. You'll just need to be willing to pay a higher interest rate. This will mean a higher monthly payment. So let me give you an example. A borrower with a very good credit score buying a house at $300,000 might hypothetically be looking at an interest rate of 3% and thus a monthly payment of about $1,583 a month. An increase of just 1% in the interest rate would increase the monthly payment to $1,734 a month. That's an increase of $151 a month or $1,812 a year. Now do that over 30 years and you're looking at over $50,000 more in interest paid. Here's the good news. You're not stuck with the terms of the loan forever. Those who originally buy a house with poor credit and find themselves in a better situation years later can actually look into refinancing their mortgage and get better terms, including a lower interest rate and thus a lower monthly payment. So in summary, can you buy a house with poor credit? The answer is yes. It will require a higher interest rate and higher down payment, but it is possible, and for those looking to build equity rather than pay rent, this is good news for you. So with that said, if you have time and the ability to do so, wait and see if you can do some quick improvements to your credit first, and if you can, end up saving yourself thousands of dollars in the long run. Should you have any real estate related questions, feel free to reach out. And of course, don't forget to like and subscribe to my channel if you found this information useful. My name is Daniel Mahabir of the Mahabir Real Estate Group at Keller Williams, and I am your Las Vegas real estate extraordinaire. Have a great day. Thank you for watching.